But welcome to another Workshop Wednesday, where we're going to be talking, we're going to be continuing our series of what's new in the new schoolofbookkeeping.com, because the workshop is brought to you by School of Bookkeeping, and setting up payroll stuff. That's the technical term for it. So today we're actually going to talk about retirement, because wouldn't we all like to retire and just have this work stuff just go away?
Yeah,
so we have
right.
We have, as always, our ADP representative Kate joining us, but she's brought a friend.
Dan.
Introduce yourself. Tell us what you do.
Perfect. Thanks, Dan and Carrie. Yes, I am a licensed registered representative. Been with ADP for 4 years. So all I do is retirement plans. Dan, I get to help people retire every day, and I love it. So I probably know too much about retirement. I could bore you to death, but I'm not going to do that today. So hopefully just hoping to provide some insight, with QuickBooks and 401k integration, and also with ADP Payroll. But Dan, I'll let you kind of kick off your portion first, and then we can kick it over to me.
Yeah. So as we've been saying over the last few workshops, schoolbookkeeping.com is transitioning to a new platform. And one of the reasons that was driving that, besides the fact that our webmaster died, is because there's actually some new features in the new platform that we were hoping to take advantage of. And one of those is being an affiliate of School of Bookkeeping. With the new platform, what we've been able to launch is a membership. So schoolbookkeeping.com is a membership-driven platform. We wanted it to be like a Netflix for accountants, right? So just the same thing that you do for in Netflix is you pay a monthly subscription. You can, if you use it, great. You can binge all you want, and then if you don't, then you don't, right? So. But there's different levels. Originally Netflix they sent you the DVD. Do you remember that, Carrie?
Yes. And you had to send it back, or you paid for it, or
right. So like you had this queue of movies that you could watch, but now it's all everything's just streaming, right? So we wanted to do the same thing with School of Bookkeeping. So you just pay a monthly membership, and if you have the time to devote to watching some of the courses, and we wanted to do it in small consumable chunks, 3 to 5 minutes at the most. For a lesson, you watch something, you get back to work, do your thing, right?
Not have to slog through an hour of getting to your one nugget,
or a half hour, like a Workshop Wednesday.
Yeah, right.
To find that nugget. And that's also what we're doing here with these workshops, is we're taking these workshops and finding the nuggets in them and turning them into bite-sized consumable lessons in School of Bookkeeping as well. But with the new platform, we've also created a core for small business membership, right? So with that, that works really well for, if you're an accounting bookkeeping professional, the premium for accountants is probably the main membership that would work best. But if you have clients that are using QuickBooks and they're more on the do-it-yourself, I want to know how to do these tasks, you can suggest to them or recommend the core, because then they can find out the exact same things that you can with regards to how QuickBooks works, right? Like if I need to do my payroll, and that's not something that you focus on, they can have access to those courses as well. Now, they don't have access to everything, like the QuickBooks Online Accountant or bookkeeping.
How to pass the exam, that kind of thing. They don't care about that.
Right. These are just focused on what a small business owner might want to get out of working with QuickBooks without needing to work with it's not a competition, right? Like we're not trying to steal your customers from you. We're trying to augment it, right? So it's a collaborative type of thing. We don't want to take your customers from you. We want to help you help your customers.
what we want to do is empower them. So some of the courses I've actually built in there that are included in the core are fundamentals of accounting. I mean, doesn't that sound like fun? They'll say, what's a balance sheet? What's a cash flow statement? And you can only repeat yourself so many times. So we have made that really, really simple down into little 3-minute things. If they only want to know what are fixed assets, they can dive down into that one piece. So it gets you back to work. You don't have to spend your time explaining to them accounting, because they really just you got tasks you need them to do. And if they're asking and bogging you down with stuff and you're like, I don't want to try to reinvent the wheel here. We've got that for you. So we're trying to empower your customers so that they know a little bit more, and then they really appreciate what you do for them.
Right. And so we're going to have some courses that are specific just for accountants, but we're also going to have anything that a small business owner might be beneficial to. We'll put that in the core course.
Core course.
Track, core course membership. And then if you register as an affiliate, you can refer those your clientele or your customers to School of Bookkeeping for the core. And then you can you get a 10% commission for active membership. So that's a way that you can utilize. Yeah, you can utilize QuickBooks or School of Bookkeeping,
resources.
School of Bookkeeping resources to help your clients teach them how to fish. Right. So we're not necessarily trying to pull those away. We're just trying to help with that. Right. So you become an affiliate of School of Bookkeeping in addition to your own membership. So ultimately you can have your own membership paid for, if you have enough clientels.
Exactly.
on the core. So moving on to payroll, right?
This is the perfect time of year to be.
What a segue.
Thinking of payroll. Well, we're all working up to our bonuses, our W-2s, our all those. Oh, have we done 401ks? Have we given out the benefits to the employee? All that. There's a lot to think about at year end. So 401k is retirement plans, not necessarily just that. It's our topic.
I mean, if you think about, I wanted to ask this of Lila. Gone are the days of you work for a company for 40 years, retire with that company, and they give you a pension. Like my father-in-law, he worked for Bell Telephone for 40 plus years, and then they had this thing called a pension that they gave. When did that shift to
sorry,
to 401k? Was it more of an kind of like what we're seeing now with like the Great Resignation, where employees kind of were hopping between companies, or what happened? Do you have any insight into the history of where self-managed retirement plans came into being over a pension?
Yeah, so it's funny with pension plans. I want to say sometime late 80s, early 90s, most companies really got away from them. Majority of businesses, they want to allow the employees to have more say in their retirement, whereas pension, it's more the employer's contribution. And so with that, I mean, it's funny, clients all the time still call a 401k a pension plan. I mean, they are very, very similar, but it's just, you see a lot of government agencies still do pension plans and things like that. But generally speaking, I mean, even 403Bs. So for nonprofits, for any of you out there that work with nonprofit clients, you may be familiar with the 403B. Most clients are getting away from those as well, just because they're super insurance heavy, really high fees, and a nonprofit can set up a normal 401k. They're not required to do a 403B. So it's funny, we've kind of seen the evolution of retirement plans and different terms and slangs and different popularity among the last decade or 2 decades even. But 401k seems to definitely be the leader as of now, especially with all of the state mandated legislation that has passed. I'm not sure if any of you out there are in a state that has passed legislation, but there's about 14 states that are now requiring. Each state's a little bit different based upon the threshold of employee count, but they are now requiring, I think in California, Washington, Oregon, states like that, if you have more than a certain amount of employees, you're now required to offer a 401k. So something you may hear about or may already know about if you are in one of those states.
So it's not just an option anymore for some of those states. It's a requirement.
Wow,
Yes.
that's awesome.
That's awesome for the employee, but not
For the
necessarily
employee,
for the-
yeah. No, I'm
the
thinking, I
employer.
have my employee hat on. That would be awesome benefit. But as the accountant or the consultant or even the employer, okay, you got to cover your
Then you
bases.
got to find the right one, and be able to set that up and be able to manage that from an employer perspective. It's just more to manage when it comes to your payroll. Now, with regards to like a pension versus a 401k, there wasn't an employee deduction to a pension, or was there? I'm not old enough to know about.
So with a
be
pension
involved.
plan, so with a pension plan, employers would fund and guarantee a specific retirement benefit for each employee, and the employer assumes the risk of the financial obligation. Does that make sense?
Yeah.
So
it
was more in the employer's hand. The employee didn't really have much say in what their retirement was going to become, what it would be when they go to retire.
The only thing they had involved is how long they were going to stay at that company in order to receive that benefit, right?
Right. Yeah. So the employees with pension plans, employees didn't have control of investment decisions, and contributions were just made by their employer. So they were pretty much told by their employer, "Hey, we're going to set up a retirement plan for you. By the way, we'll put something in there and we'll pick some good investments," right? Like, kind of sounds crazy now to think about it.
Trust us.
Knowing me, I would be like, wait a minute. How much? What's it going to be? What are you investing in? Right? All those questions. So yeah, with the 401k, it's, the employee gets to control their retirement. Obviously there's a company match, and I think that's why so many employers have now gravitated to a 401k, and pension plans are kind of a thing of the past.
Gotcha. So we're going to talk about setting up a retirement plan as far as a payroll item inside of QuickBooks. So Carrie, we'll start with you. With your desktop. Wake up.
I am awake. All right. Can you see my screen?
We can see your screen. Now with desktop, you have your choice of an easy setup or a custom setup. I want you to go through the custom setup so that we can see the uniqueness of what you can actually do inside of that. But really, with an easy setup, you're just going to choose 401k, and then everything else is defaulted. But here we want to see, the under the hood, so to speak, of the setting up of a deduction. So to what we were just saying, talking with Lila, 401k, as most employees would recognize, is you elect to deduct a certain portion of your earnings to help fund the 401k in your own retirement. The advantage of doing that is that it is pre-tax, but only with federal and state, right? It's not going to be you never can get away from FICA, right? You can't get away from Social Security and Medicare when it comes to that. But let's go ahead so it's a deduction. So when you're looking at, what kind of payroll item to set up inside of QuickBooks, it's a deduction because it's deducting from pay, from the net pay of what they're actually going to be receiving.
Okay.
All right. So you say, here we see how bad a speller Carrie is.
Thank goodness for spell check. And I caught this one. All right. So I'm just going to name, and this is the one that deducts out of your check, like he talks about, and it's going to flag the pre-tax portion.
Right.
And
so then you're going to have, what is the name of the agency that you pay that to, right? Because as a 401k is deducted, you're going to need to send that as the employer to someone else, some other entity to actually fund the 401k, because as we talked about in QuickBooks Payroll, there's no payroll service inside of QuickBooks Online or desktop that will send those payments on your behalf. You have to do those manually.
Right.
And then it's going to ask, what's the liability account for accruing those payments?
Right. And so what you can point it to one you already have. You can just have it be the plain old, I hate this one though, plain old payroll liabilities. I like to name my own. Actually, it should have been a sub account, but point it to something so you can actually get to those details. Going back, I should have just done a sub account here, but
you can change it later, right? I mean, it's not, you can change this as a sub account
move this
in your chart of accounts. But what to Carrie's point, if you want to separate out the payroll liabilities for the 401k accruals, you can do that. Or you could just lump it in with, payroll liabilities in general.
Which is, anyway, you can.
Not Carrie approved. That's
not my approved. So, and in here you would put the vendor. So if it's, Bank of America or whatever it is, and then the number that identifies the agency. Mm-hmm. And then here is the key part.
Exactly. This is what this is like the most important thing when you're setting up, especially on your own. Like if you're doing the custom setup, just like anything else, if you're doing things customized, you're going to be able to do a lot more, and that could potentially cause other issues if you do it wrong, right?
Yes.
So, as you can see, there is a slew of what's called tax tracking types inside of here, and of course, there's one called 401k, right? But but there's other things that are out there like simple IRAs and simple SEP. I don't know what all their maybe
Roth and things. I'm like, you see my face.
But you can see. Go ahead and choose 401k. Okay.
This is the part that's really important, is to read those details.
Right, because the tax tracking type, and fundamentally what it does is it tells QuickBooks Desktop where is this stuff going to show up on the payroll forms, and what is its default tax ability on the next screen. But we're not there yet. But here you can see what would happen to items that are using this, to employees who are using this payroll item. What's going to happen when you put a dollar amount in there, right? So on a 940, it's excluded from wages, right? Because it's not subject to federal taxes, right?
Oh no, 940, it's included in wages. So it is.
Oh, it's included.
Yeah.
Right. Because you still have to, the only thing it's not subject to is federal and state withholding, not federal and state unemployment.
Right.
Don't get away from that either. But on a 941 or 944, it reduces the wages in line 2 or line 1. So if you know
what all these mean,
what it means, right? If you know what's supposed to be in line 1, it's telling you here it's going to reduce the wages. And then also for a W-2, it reduces box 1, which is your federal amount
wages
in your W-2. Yeah, and then it will check.
Dan and Carrie. I didn't mean to interrupt. You may want to just mention most 401k plans allow for pre-tax and Roth contributions. So Roth contributions it would probably be a separate item, just something to think about. I'd say about 90% of plans allow Roth as well. I'm not sure if they have that in there.
So
yes,
who
so
is
you would need
this
to set
Roth
up
guy?
2 separate ones.
There's 2. We have 3 Roth people. I guess we would do Roth 401k for a separate.
Yeah, so you would need to distinguish between the 2.
And what is the advantage of Roth over a tradition? Yeah, who is this guy and why is he in our?
Yeah. Yes. So Mr. Roth or Mrs. Roth, what the idea behind that is any money that is contributed Roth, taxes are taken out on the employee's paychecks first on the full gross amount, and then the Roth or after-tax contribution goes into the 401k. So the idea there is when I go to retire, any money that I put in Roth or after tax and any growth will not be taxed. So, for example, me personally, I do a combination of both pre-tax and Roth. Who knows where I'm going to be in 30 years, right? But some employers and some employees will do all of one or all the other, or a combination of both is very common. So I'd say about 90% of 401k plans do offer Roth. So just make sure when you are setting it up, you double check.
Yeah,
So one is,
from an employee's perspective, if you've got a lot of time, I would recommend doing the Roth, right? Because that growth over time is going to grow far more than if you're going to tax it now. But that's the thing that people don't realize when they do their 401k contribution, is not realizing that after 59 and a half, when I take a distribution on that, I'm taxed on that whole amount that I get as a distribution as its income, because you're going to get, the government's going to get their taxes either way,
one way or the other.
whether your earnings today or your distributions tomorrow. But the Roth will take the taxes today, and then as the growth happens, which we hope happens, and you take that distribution, it's tax free. Correct, Lila? Did I get that right?
That's correct.
So that's
Yay.
good, especially for young, if you have time, if you're a younger person. That's
now, if you're about to retire, right, and that it's not going to grow. You're in the catch up period, and you're putting more into your 401k, and maybe you've got like 10 to 5 years. Maybe you want to do the traditional 401k and not have the taxes, and have the tax benefit today as opposed to later when you're going to take out, you distribute. So next screen, Carrie.
Okay, so next screen.
This is the screen that talks about whether it's taxable or not, right? So you can see on federal withholding it's not subject. So a check mark here means it's not subject to those taxes. So you want a check mark to not be taxed, right? And you can see that you can scroll down on this screen and it'll have the state, right? So there's California in there.
Yeah.
And it's only the withholdings, right? And if you try to check Medicare, go ahead, Carrie, I dare you.
Uh-oh.
You can check it. Yeah. Okay. Hit next. Now it says, no.
Don't touch it.
You weren't supposed to do that. But it doesn't stop you, right? It just only says they're usually not checked. So this is where you can get yourself into trouble if you accidentally check something here as it's not subject to those taxes, but it is. So go ahead and click the default. No, there you go.
So it's smart enough to know what to do here. So we can totally screw this up.
That's one of the reasons to choose an easy setup, so that all those defaults are checked for you. But if you need that customization, and it's like, okay, it's not this way, it's this way, you can check it and override that. All right, so hit next.
And I recommend having your payroll expert walk you through this, because it can get hairy. Yeah.
All right, so this is not relevant to this item, but in some cases you can have things calculated based on quantity. This is good for like a mileage deduction, or something that has a unit associated with it, or you can have it based on hours as well. But this is not. This is a neither option. Hit next. All right, and then with a 401k, sometimes there is a default rate and limit. So this is where you're going to put in the defaults of what that contribution is going to be, and when is it going to stop calculating those amounts. Right. So if you have a something that is employee based, don't put in a default rate in here, because that's going to affect every employee that you put this item on. You would set that up under the employee side. But if there is an annual limit, you would want to put that in here. Lila, what is the annual limit for 401k deductions? Not on the catch up, but just the.
For 2022, it will be $20,500 per year. For this year, it's $19,500, but it is increasing next year.
Got it. And then for the catch up, is that over 55? You're allowed to
over 50.
50.
Yep, over 50. So if any employee turns 50 in 2022, they will be able to put away up to $27,000 a year. That includes the $20,500 plus the $6,500 catch up.
Got it. And then you can tell it right here whether that annual limit is, or whether that limit is annual. Hit the drop down there, Carrie. We have monthly. You can restart it at every month, or if it's just a one-time limit. So we're just going to leave it at annual and then hit finish. That's it.
Well, or you can do the scheduled payment,
Right.
and this is going to be based on when you're going to write that check to the financial institution.
Right. You want to set up a scheduled liability payment so that as you have employees deducting, I can't say it, have employees deducting their 401k contributions from their paycheck, it's going to accrue. And then eventually you need to give that money to somebody, and you're going to do that on a scheduled basis. QuickBooks will allow you to set up those reminders to do that. But again, it doesn't remit those payments for you on any service. So the enhanced or the assisted, those kind of benefits don't get automatically paid for you.
And I need to do a disclaimer about when you have a customer or when you're setting your own up and you're doing enhanced, if you didn't start on day one, January 1, be very careful that you do your back entries in date order so that you're not running payroll and before you have your year-to-date numbers tied out, because 401k can create havoc on your pay stubs if you don't do it correctly. And I'm speaking from customers that have just turned on payroll, run paychecks, and forget the history, and it is a disaster. So.
Now, one other caveat of 401ks is this concept of a company match, right? So that's part of the benefit of the benefits package is whatever the company decides to do as a company contribution. Now, Lila, is that totally up to the employer's discretion, or are there some requirements when it comes to matching? Because I've seen some companies that don't offer a match, and then there's some that, like when I worked for Intuit, their match was so complicated they couldn't even set it up inside of QuickBooks. I mean, it was like 125% up to the first 6%, and then it was went down to 75% thereafter. It was really hard to understand, but I just put it at the minimum to get the most out of the company.
Right. And to keep it simple, it is up to the employer. That's the short answer for you. It is not required, but if the employer and the owner themselves want to max out and have other employees, then a safe harbor plan would be the best fit, and that's a required minimum 4% match, which is the most common type of plan.
Got it. All right, so that would be set up as a different payroll item type when you're setting it up inside of QuickBooks. This is now a company contribution because this doesn't affect the employee's pay, but it doesn't affect the employee's amount that's going into their 401k. It's going to affect their amount that is going to show up on their on some of the payroll forms. So you want to make sure that those are set up as company contributions as opposed to deductions, because then you're going to be deducting. If you set it up wrong, you're going to set it up as something that's double dipping out of the employee's paycheck, and then you have an upset employee, and madness ensues.
Right. And it's not only, the company paid as a liability, because we can set it up so that it's chunking that amount in each time a check is run. It's also going to be an expense.
Right.
And
right. Company contributions are expenses to the business, right? So because you're giving money to the, allocating money to the employer, the employee, excuse me, that money is now an expense to the business.
Right. So you've got to properly map however you want to set that up. And then tax tracking, you want to select a match. Co-company match.
Right.
And then this explains how it affects all those snazzy IRS forms. Yeah. And again, don't be hopping around here. It shouldn't.
This is not subject to taxes at all. and it doesn't have any tax benefit to the employee. It's just a deduction that has the tax benefit.
So again, this quantity we don't care about. This is where you said typically it's 4%. I mean, if I'm just going to put a number in here.
Now, this is where you would want to set these default rates and limits on the item, because that's typically a company policy, and you want to apply that to every employee that happens after that. So you can do that, and you can override these things on an employee basis as well.
And yeah,
right. But if you have a cap on your deductions or your company contribution towards their 401k, you would want to put that as an annual limit in here.
Okay. So I'll just hit, like if 20,000 or something.
Yeah. Well, I hope as an employer, you're not putting in 20,000 on, but it could be like 5,000 or 6,000 or something like that.
Okay.
There usually isn't a limit on company match, just because it's a percentage of salary. So if employees are making a lot of money,
okay,
then there wouldn't be a limit on match per se, a dollar amount.
Okay. So just leave that blank.
Yep.
Okay. And then we can set up
a payment for that. And then the last thing is then to go into each employee and set up those, set up their individual deductions. So it will take whatever the default is for the payroll item that you've set up in here, and then allow you to make some further changes inside that company or that employee. So this is where you would put in your deductions or additions, deductions, and company contributions when you edit the employee. So there's your 401k employee and the 401k company match. And if you want to override the 4 or the 3%,
if that number's different, you can change it here.
You can change it right in there.
And then we check that, is this considered a qualified pension plan? Because see, now you understand why we ask these questions.
They are not covered by a qualified pension plan, because this is not, as thanks to Lila, we have determined that this is not a qualified pension plan.
All right. So then that's setting it up. Other than over here, you can set up you want to set up the liability so that they come over here and all the amounts that you have actually withheld or run a paycheck, it'll tell you which ones to view and pay.
All right. So let's pop over to QuickBooks Online. We'll summarize, or you stopped sharing and it changed the share screen button. All right. You should be able to see my screen, and I'm in QuickBooks Online, and it seems to be working. But it's the same kind of thing here. You would, instead of actually setting up the payroll item outside of, on the payroll item list like QuickBooks Desktop has, you do that through an employee. You would set it up under the employee first. Okay. And there we go. Horrible. Let me refresh. AWS was down, so there we go. Okay, so all right. So as we showed last week about setting up an employee, there's three sections here. There's pay, profile, and employment. Under the pay section is where you would specify deductions. So you scroll down to the test employee. Does test have any deductions? Examples: retirement and healthcare, right? So we would add a deduction here, and we would choose to add it. If it doesn't have in the list, you would create a new one. Right? The deduction is 4, and it will give you the typical deductions of what you would be able to set up for the online payroll. We go to retirement plans, the type, and it will give us the general or the typical retirement plan. So here's our 401k or our catch up, so we can set that up. 401k. See how horrible a speller I am. Then you have a flat amount, a percentage of gross pay as the options, and you can choose the percentage in here. So we'll keep it the same. You had 3%, and then the annual limit is filled in for you, so you don't have to know all these things. So you're getting a little bit of an an
All right,
advantage.
you win that. You win that one.
Yes. One win for QBO.
One. That's all you get
And
today.
nope, 2 wins. You can
Oh,
set
no,
up the
no.
company contribution at the same time.
Oh, okay.
So
That
you don't
is a
have to
one.
set up. So you don't have to set up the deduction and then the company contribution. You can set that in as the at the same time. So we're going to do the 4% and the annual maximum if you're going to put that in.
Well, she was saying that there isn't one.
Right. Well, there is no.
I wouldn't.
There is no requirement, but there
Oh.
could be a company policy about the maximum that they would contribute.
There
Right,
usually is not.
There usually
No.
isn't. Okay.
No, because if I'm an employee, only make 30,000, but my manager makes 150,000, 4% is going to be a lot different for both of us.
That's true. That's true. All right. So it's already set up there under one thing. So when I go ahead and pay that,
Hey,
you know,
did you get to map it to the proper account?
you don't do that here.
It does it for you?
It does it for you.
Okay.
That is, I'm going to do this right now. That is under payroll settings. You're going to go somewhere else. Do that. Here's your account mapping. So win for desktop, you can do it all in one place. Right. So here's your company contributions, where you're going to map that to, and our 401k already goes to a sub account of payroll liabilities. So default is in there, but if you needed to modify it, you certainly could. So that's how you would set it up inside of QuickBooks Online when it comes to being able to set up your 401k deductions. You have a variety of other retirement options. So I'm going to now hand the ball over to Kate or Lila. I don't know who's going to walk us through doing it inside of ADP.
Yeah, absolutely. So something I was going to add for those advisors out there that are processing payroll with QuickBooks, and they have a 401k and you are deducting contributions, most record keepers, so whether that be John Hancock or Voya or Empower, not only do you have to make sure you set up the deductions in payroll or in QuickBooks, but then they also require after every payroll is run that you enter in that information. So the two systems don't talk. So there's QuickBooks payroll, and then there's whoever the 401k record keeper is, whether that be, there's a million of them out there, Principal, Hancock, or the American Funds, you name it. So there's no way to get the data into those record keeper systems. So normally, depending on who it is, some of them allow you to upload a file. I know QuickBooks can export into CDS or PDF, but 9 times out of 10, you're going to have to log into that record keeper's website and key the contributions, so the employee amount and the employer match for each employee, which leaves a lot of room for human error. Now with ADP, I will let Caitlin kind of show you the demo and how you would add in a deduction if they did not have the 401k with us. However, in an ideal world, there's 2 different ways that our 401k works. The first is just like any other record keeper out there. So for example, let's say you want to keep your clients on QuickBooks payroll, but they want to set up a 401k. We have built out a technology called ADP Connect, where basically all you would have to do is take that payroll export file, whatever format it comes in, and we get that during implementation. All you have to do is one-click upload that file. So you don't actually have to manually key contributions. And again, that's if you have QuickBooks payroll and ADP 401k, just like any other record keeper out there. Now, in an ideal world, if you have ADP payroll and ADP 401k, it truly is 360 integration, and you don't even have to set up deductions. So what? I was going to try to share my screen real quick. So when you think about this, oops, go through. when you think about the life cycle of a 401k, right? Employees enroll. So when they enroll in the plan, whether it's 3%, 4%, 5%, you got to get that into the system. And then what if they want to change their percentage in 2 months? Maybe I want to up my percentage from 4% to 5%. And then what if I want to take a loan for my 401k, right? All these different things. From the time that we have all your payroll data when you use ADP payroll. So that's the beautiful thing. You don't have to key contributions. You don't have to set up deductions. You don't have to move money, or you don't have to key the employer contributions either. So let's say I was an employee of Dan and Carrie, and let's say that they use ADP payroll and 401k. When they hire me and enter me into the payroll system, we know what my hire date. So we start tracking eligibility. The really big thing that you may see, a lot of plans have eligibility requirements based upon length of service. So you may see a 3-month eligibility or 1 year even. So in a normal scenario, I meet with the person who's processing payroll, and they say, yeah, I have a whole bunch of sticky notes reminding me of when each employee is eligible, so I can remember to send them the enrollment. Not with ADP. We track that for you. We know their birth date, so we know if they're over the age of 50 or under. So we can send out that enrollment at the time that they become eligible. And then once they enroll, it automatically updates in payroll. The person processing the payroll doesn't have to do a single thing. So it really is, we're really one of the only providers out there that can offer this. And it really takes the work, not only off of you guys as the CPAs and their advisors, but also off of the business owner, right? Messing up a 401k can be very costly. And this really, I think, eliminates human error from that whole equation.
Does that also affect like vesting dates, like not necessarily just eligibility, but I remember when I first started into it, they had this thing where it's like after the first year, you're eligible for 25% of the company match of the 401k, and then 50% after the second year. So the carrot of staying on at least 4 years was there for the 401k piece of that.
Right, was that you got the full company match, right? So we would know if an employee, let's say that you guys fire me because I showed up late too many times, right? Let's say you fire me and I haven't been there long
enough
would
happen
to get the vesting, right? In my example, maybe I ate too many donuts or stole donuts from the coffee shop. Who knows? But if you fire me in payroll and terminate me as an employee with ADP, it tells the 401k that. So we know, hey, she wasn't here for the 3-year vesting. So maybe she's only going to get 20% of the company match. So it's the 401k and payroll truly do talk to each other in live time. The other thing too is the mobile app. So this is from an employee perspective. Every single company that uses ADP payroll, their employees can use this app. It's where they view their pay stubs, can see their W-2s, so on and so forth. If they have the 401k with us, they can also, this is the easiest thing. Caitlin and I use this exact same app as ADP employees. I can go in and I can say, hey, I want to change my contribution from 6% to 7%. I go ahead, click update. It automatically updates in payroll. So I don't have to, or Dan and Carrie don't have to go back in and make that change. Again, I can go in and change my investments, or I can do it online. We also have Spanish material as well. Everything is available in Spanish as well as other languages with the app, enrollment guide, so on and so forth. But yeah, we really try to make it so seamless that all the business owner really has to focus on is how much do they want to contribute. We don't want to add any extra work to their plate.
So when you're actually using, and that's one of the things is that gives you the flexibility is if you are using QBO payroll, you can use ADPs, but you don't get the seamless integration, which is that's the caveat.
Yeah, you would just basically have to still upload the QuickBooks payroll file into the 401k website, and then we would notify you. So let's say when I make a change and I'm an employee and I enroll, ADP would then send an email to you to notify you, hey, this employee enrolled at 3%. Make sure you update this change in payroll, is how that would work.
Fantastic. So Kate, are you going to show us how to activate inside of Run?
I was trying to pull it up on my end, but I'm actually having a little difficulty getting the demo to work.
It's your turn to have problems.
It's my turn. I've been waiting. It's been a few weeks, so.
Right.
Let's see.
Well, maybe we can have you do that another
Yeah.
workshop. Since you're joining us every week now, you're like a third part of the
A
workshop.
permanent special guest.
Exactly. Gary, you're muted. Did you say something?
I said, yes, that's good. We can have her show that next week.
Perfect. Thank you, guys.
Okay.
Sorry about that.
That's okay. That's the challenge of doing live webinars that are reliant on the internet.
Yes. The beauty of technology.
Right. The double-edged sword of online access. So thanks again for joining us, Kate, and Lila for giving us your insights on retirement. I'm ready to retire.
We have to put money
Me too.
into the fund first.
Oh, that would be a pension that we're talking.
Yeah.
Okay. All right. Well, thanks for joining us for another workshop Wednesday. We'll talk next time about, I think we'll do like health benefits, because that'll be another benefit next time about setting those up. Very similar to setting up a 401k contribution, but there are some other nuances to doing that. So thanks for joining us today, and we'll see you next week on another workshop Wednesday.
Thank you. Have a great week.